and get the agenda up here. Meeting is being conducted, of course, consistent with the state of California and the Alameda County Health Officer orders. So I'm calling it to order, and we'll ask, well, let's see, do we have, yes, and let the record reflect that all of the committee members, Councilmember Lamnon and Councilmember Wahab are here. So what is next? Roll call. And so do we have any public, let's see. We don't have any attendees, so I am assuming we don't have any public comments. So we'll move on.
Doesn't appear so.
Yeah, okay, so we will now, so we'll move on with, we'll move on from that and go to approval of the minutes of the October 21st meeting.
I'll move.
Oh, okay. But can we make a small correction?
Of course.
There's no H in my name.
Oh,
No,
That would be,
I accept the correction.
thank you.
Okay, I'm sorry. That must have been an oversight by me.
my
No problem. It happens all the time.
All right, with that, is everyone okay with the minutes from October 21st?
Aye.
Aye.
Okay, the minutes are unanimously approved. We will now go on to item number 2, which is general fund key revenue review. And we did everybody get the document that Dustin sent out today, which I got, but now I don't know where it is. But anyway.
Photo, correct? The Excel, it was like 4 or 5 lines.
table. Yeah.
Yeah.
Small table. And I've got it on a slide as well. So if you don't have it, it's no problem. It'll be up on the screen here momentarily.
Okay.
All right. So you want to go ahead and get into it here?
Mayor, are we ready to go ahead with the item?
Yes. Well, I don't. You said you were going to put it up on this on your.
I certainly can. I was just waiting to make sure that you were ready.
Oh yeah, I'm just looking for my copy because I know I did print it out and look at it. But go ahead and start.
Okay, 1 second here. All right. Of course. Okay. So can everybody see this?
Yes.
All right. So what we have is a small table that we put together to try to demonstrate what the difference between some of the city's key revenues in comparison to the first quarter of fiscal year 2020 for the current fiscal year 2021. And obviously, the city's number one revenue source is property tax. Don't be alarmed that this is a much smaller number than we would expect to see 1 quarter in. It's important to remember that the city gets its the main payments in December and April, as we all pay our property taxes to the county, and then they remit them to the city. We did see a pretty for the in dollar change was minimal. The percentage change was rather large, but that's not something that we didn't expect to see, given we've seen property values stay at or above where they were before, in the previous calendar year, fiscal year. And so they've kind of continued to creep up just slightly, and I would expect that property tax will stay at or above last year's levels, hopefully, assuming that folks are able to make their property tax payments as they have been in years past. We've got sales tax next. We do see a dip in sales tax. I think that's, again, something we expected to see. It is a bit more than I think we expected, or probably in range between 5 and 10%, and coming in at 9%. It's tough. I'll know more what sort of what areas of the economy are hurting, or the sales tax is being affected the most by the recession and the pandemic. I think we can probably take our guesses and speculate a bit, but I'll know a bit more next month after we get some additional information from the state on those numbers and some details. Real property transfer tax is about the same as it was in the prior year, first quarter of fiscal year 20, which is fantastic. I think that's a reflection of the fact that property values have been at or above where they were, because we've certainly seen sales slow down quite a bit, and the inventory of homes on the market is also much reduced from where it was a year ago. Not sure how that will go as we proceed further into the calendar and fiscal year, just given the cyclical nature of things, and then also with the pandemic and heading back into the purple zone, if you will. Not sure how that'll affect home sales, but hopefully not too much. Again, we saw a pretty good sized dip with the utility users tax this last the first quarter, which was a bit surprising to me. It makes me think that it's possible that we're missing a payment or two that may have been remitted late, and we'll certainly look after that. But this is, given how hot it was this summer, and I would assume that folks were using more electricity, even though this doesn't reflect that. So we'll continue to look into it. I know there's a couple of factors, and we'll get back to the committee on that once we have a bit more information. DOT is the biggest hit here. Also, not surprising, as we know there aren't as many people traveling. We're taking definitely double digit in the 40% range hit over the previous first quarter of the last fiscal year. With this would be a time where I would expect travel to be picking back up with the holidays, et cetera. But obviously, as we've hit shutdown again, we're probably not going to see a big pickup there. Hopefully for reasons of public health, we don't see that pickup, and people are doing what they need to do to help combat the pandemic. But certainly we would love to see pick back up sometime soon here. The good news is Measure C has actually picked up a bit, which if I took when I first saw these numbers, it threw me a bit, because we have a dip in sales tax, which would make me think Measure C is also down. That's probably due to a number of factors. And like I said, once we get some more information on the sales tax, we will have a bit more information on it. But I think it's fair to speculate here. There's a couple factors in that. One, the state's sales tax deferral program may have had some impact. Also, Measure C sales tax comes straight to the city, and doesn't go through the state and the county the same ways that the Bradley Burns sales tax might, and dependent on whether it goes into the county pool, also to the county. So it probably has much to do with the fact that it's a district tax that comes straight to the city, and doesn't have anybody else taking a cut from it the same way that the sales tax up towards the top of the sheet does. All that being said, we've got a an overall change of 10% in some of the key general fund revenue sources, right in line with sort of what we projected of a 5 to 10% decrease. When we're talking, it's a bit disappointing to me. I'm sure disappointing to all of you. My hope was that that would not be the case. With us sort of seeing stronger than projected revenues, or expecting stronger than the projected revenues as the economy seemed to be starting to open back up, but there clearly were segments that just did not open during that first quarter. And if you would have asked me a month and a half ago, I would have said that I would have continued to expect revenues to be moving in the right direction, up and to the right, if you will, if you're looking at a graph. But given what's happened over the last week and a half, I'm not sure where we'll head moving forward. But only time will tell there. So that's really all I've got on this. I'm happy to answer any questions that you guys might have. Obviously, we will continue to monitor this very closely. We'll absolutely be bringing back more information than we have it, and obviously get as much detail and provide as many details as we can to sort of help council make decisions, help council to understand what's going on with revenues and where we think that we might head. So. You're muted, Mayor.
All right, thank you. And that's your report. And are there any questions, Aisha?
Thank you, Mayor. So this is kind of what we were expecting, right? Just long range that, this would go slightly negative. You may have said this and I may have glossed over it looking at the numbers, but the TOT tax, the increase will eventually go into place in January 1st.
Correct. Yeah, and I didn't mention that. And council will have to set based on the results of the measure that passed, set the rate up to 14.5%, and then obviously we'll see that increase beginning in the first quarter of.
Justin, sorry to interrupt, but I think the council had talked about potentially deferring that increase up to 6 months. So not implementing it on January 1st, but probably waiting, to see.
And also, maybe not going up to the 14%.
Correct.
So I do want to highlight that even if we did go up to the 14%, it doesn't make an impact based on the numbers as significantly as some of the other particular taxes, just because it's such a smaller revenue to begin with and things like that. I do want to say that I know that the county is still utilizing a lot of the hotels as like COVID housing stations for a lot of people. So I'm not sure if we can participate in more contracts or get more bids out in regards to that. It's a slippery slope, obviously, because we definitely want to make sure that people in regards to public safety are safe. I will also say that property tax, it's interesting that that's the one thing that doesn't fluctuate much because it's that 1%, and any older homes that are being sold in a seller's market today are benefiting significantly, right? And then as far as the sales tax, this was the big question as to how the tax measure that was on the ballot, would it pass, would it not pass? Are people overtaxed? I personally think the Hayward residents are overtaxed because our sales tax is kind of high. And plus we have the little added measures. So I definitely want to focus a little bit more on how we can kind of improve our economic development. That was another reason why I voted for Costco, because it does generate revenue to the city. It's not as much as we need, but we do need to take a look at different opportunities. So I really appreciate your report. It's not something I'm excited to see with these numbers, but at least it makes us focus on what we need to focus on, and that's what I want to focus on. So thank you.
All right, Sarah, did you have any comments or questions? I mean, it could be worse. I always like to look at things that way. I think none of us knew, and when we still don't know how long this situation is going to go on, how and what the final and what the residual impact is going to be. Everything is just not going to just jump right back into place. Although probably there is some pent up demand for some of this. I don't know. It's just still, and I really think we have to be very careful about that transient occupancy tax. I mean, the hotel industry is just not there yet, and it gives us the opportunity. It gives us the option of doing it, and it won't go away, right? I mean, there's no time limit on it, so I don't know. We're going to have to, as a council, talk about that.
Can I add one more thing too?
Sure.
I will say, just from a business perspective, right after Christmas, as of January and slightly up till March, but mostly January, it is the slowest months for retail in a lot of businesses. So I actually think our next quarter is not going to look great either. So I see more negative than positive. And Mayor, as you said, that we're not going to bounce back that quickly, as much as people are very hopeful. But so I do think we need to be very
well. This quarter that we're looking at is July through September. So the next quarter would be October through December. And I mean, I would think it isn't going to be like it usually is. They're not going to have the huge, but there should be some bump up of that. We are getting some online tax, right? And people are buying a lot online. So I think I mean, I don't know if you were talking about the same quarter. I would agree also that
January through like March.
Yeah, but we still have this quarter that we're in right now to see. And, I don't know. I don't know
for PS5 sales at our local GameStops, right?
People are buying online, and I don't know what else do people do during this holiday season that they won't be doing. Whoops. Can you hear me still?
Yes.
Because my screen just went blank, so I can't see anything. I'm going to have to turn it off and turn it back on. So just, Sarah, why don't you carry on here for a minute, and I'll see if I can get back.
Okay. If you hit escape, does that help you, Mayor?
Escape. Yes, actually, that did help. Before that happened, I just hit off, and then I hit on again, and that actually brought me back to that. I tried escape. Thank you. I'm back. Sure.
I'll hand back the meeting to you and see if we're ready to continue.
Are there any other comments anybody has about this? We can then, if there aren't, we can move on to item number 3, which is regarding the investment portfolio review and 2021 Statement of Investment Policy Update.
Great, thank you. So I will introduce very briefly and step aside and let the experts take it away. We have with us here tonight Monique Spike from PFM. PFM is one of our financial advisors, specifically in the area of managing the city's portfolio and our investments, and advising us in that area. Many of you will probably remember Monique. She's been with the city for a few years now, since I've been with the city. So as far as I'm concerned, she's been with us forever. She does a great job helping us to manage our investments and advise us in a lot of areas. We're going to do a couple things this evening. One is take a look at the Statement of Investment Policy and the minor changes that are basically statutorily required, and I think one other, and then also do a quick review of the city's investment portfolio and its performance this past year. So without further ado, Monique, take us away.
Thank you, Dustin. Actually, I think I'm still on mute. No, I'm not. Okay, great. Thank you, Dustin. Good evening, everyone. I'm going to, I have some materials to share. If the host would allow me to share my screen.
Let me see if I can do that.
So let me see. While I'm getting that functionality, I'll start with a few opening comments, and I will present from the packet. So I'm going to start on page 9 of the packet.
I'm sorry to interrupt. So in order for you to share, do you have to become the co-host?
No, it just said host disabled participant screen sharing.
Where is that? Is that sign up on my end?
Oh, I can change that 1 second.
Oh, there we go. That worked. Thank you, Dustin.
Okay, thanks, Dustin.
All right. So thank you. So just a few brief comments about PFM. I know I've been with the city for a while, but just really wanted to emphasize, PFM, we've been in the public sector space for 40 years, and we have more than 250 investment professionals really working to help keep the city's assets safe. We manage or advise on $160 billion across the United States, and $50 billion of those assets are for California public agencies like the city. One of the things that I really want to emphasize at this moment in time is a lot of the uncertainty that's been in the investor market since March has really allowed, I think, in this environment, PFM to shine in that we were really able to leverage our credit resources to ensure the safety of the portfolio. We were able to leverage our philosophy of safety to make sure that we were making decisions, I think, in the height of the pandemic to keep the city's assets safe. So I'll talk about those a little bit, but I really just wanted to underscore I think our assets and our resources at PFM, which really, I think, helped carry the day during the height of the volatility in the market. What are the current market themes? Well, a couple of big things I think that is really important to note. Over the past 8-9 months, essentially, we have been really focused on the COVID pandemic, as I'm certain as you have been. In the market, what has been done is that the health crisis really caused a lot of impacts on the economy and impacts on the financial markets. Where we stand today with COVID is we're at a point where we're seeing a surge in cases. As you know, the counties here in the Bay Area have mostly been pushed back to the purple tier in the state's blueprint for a healthy economy or healthy California. And, that's going to cause some deleterious effects on the economy. And market investors are really focused on that because the consumer is the economy's bread and butter. So what we're thinking about is how does that surge in cases, how does the re-implementation of shelter-in-place orders really going to impact the ability of consumers to continue to drive growth and drive business investment, both for Main Street and also for the larger area banks. For PFM, I'll talk more about sort of the impact that's had on the actions we've taken in the portfolio. But there is also a concern in the financial markets in general. At the height of the pandemic in March and April, what we saw was a lot of volatility in the bond markets and the equity markets. Investors were concerned about the pandemic, concerned about businesses' ability to stay afloat. And what that caused is some major issues in liquidity. So we saw bond yields, the amount of income you would otherwise receive on a corporate bond, increase substantially. So what happened? Well, the Fed acted very quickly to really try to bring some reassurance to the market. One of the first things they did was they cut interest rates by 150 basis points in March. So now the federal funds target rate, which is an anchor point for the yield curve, is currently in a range of 0 to 25 basis points. Now, what's unique about this is when we actually started managing the city's portfolio, that was the rate environment. We started managing the portfolio in 2012 when rates were in 0 to 25 basis points for the federal funds target rate. So the good news is we've been here before with the city's portfolio, and we have a playbook to maximize earnings and continue to keep the city's portfolio safe. The Fed also implemented major programs to provide liquidity to the financial markets. And what that means is the Fed essentially announced that they would provide financial support. They would be a buyer of a number of different types of bonds, corporate bonds, repurchase agreements, commercial paper, to essentially indicate to the market that there were no problems here. There's a buyer if you need liquidity, if you need to sell your debt. And that was very important. That caused markets to calm down significantly. And what we saw was corporate yield spreads going back to where they were essentially pre-pandemic. So in terms of interest rates, U.S. Treasury yields did plunge during March, and they've stayed there since. So we have a relatively low interest rate environment. And the longer end of the yield curve also remained near record lows. And so in terms of the interest rate environment, one of the things before I talk about interest rates is I do want to talk about the economic environment today. So one of the things that I do want to highlight is that although we had a spike in the unemployment rate earlier this year in March, levels have come down significantly. There is good news on the horizon. The unemployment rate ended the quarter at 7.9%, which, as you can see from this chart, is a substantial decline from April, where we saw the unemployment rate spike to 14.7. On the right side of this chart, this highlights the amount of folks who are receiving unemployment assistance. The taupe is continuing claims, that's your traditional unemployment. And the blue is the pandemic unemployment assistance. That's that extra unemployment assistance that was provided as a result of the CARES Act. So folks who are receiving that include people who were not eligible for regular unemployment, gig workers, self-employed workers. And as you can see, by the end of the quarter, essentially, we had about 25 million folks who are still on the unemployment rolls. So I mentioned already that yields dropped substantially since March. On this chart in the yellow, I plot what the yield environment looked like at the end of the fiscal year in 2019. The dotted blue is what the fiscal year ended, this current fiscal year, and the solid blue is year to date as of the third calendar quarter. And as you can see, again, the 3-month Treasury bill, the 3-month T-bill is 9 basis points, and the 5-year Treasury is 28 basis points. So as I mentioned, when we started managing the city's portfolio in 2012, the interest rate environment was the same. We were in this low rate environment. And what we've done since then, as you will see, given our return on the portfolio, is we've been able to add value a number of different ways. The ways we do it here at PFM is we look to find best relative value amongst the sectors that are allowed by the city's investment policy. We are looking to find income opportunities in the market amongst federal agency securities, corporate notes, other securities to provide income that'll hopefully allow us to weather the storm. Specifically, what did we do in the city's portfolio over the last year? Well, the city's primary objectives, of course, are safety first, then liquidity, focusing on return on the investment and diversification. We're very proud to say that despite the turmoil in the market, the city's portfolio was, bolstered by very high quality investments. We did not see any corporate note in the portfolio have any stressors as a result of the environment. We did a COVID-19 specific credit overlay where we evaluated all of the issuers in the portfolio for their exposure to COVID-19 and the impact that the pandemic would have on their ability to generate revenue and on their ability to manage their costs and their supply chain. The city's portfolio is extremely liquid, primarily government securities that allows us to liquidate any portfolio holdings in the event the city has liquidity needs. But the city also has a fairly high cash profile, so we weren't necessarily worried about liquidity in the portfolio. Now, return on the investment is something that we've continued to do. Again, in this low interest rate environment, active management of the portfolio is going to be paramount to generating the return on the portfolio during this interest rate environment. And we note duration management, which is really a way of saying that we want to manage the interest rate risk on the portfolio by not being overly long. So we don't want to have maturities much longer than a 1 to 3 year stance, which is the city's current benchmark. And then diversification, finally, we wanted to ensure that we were able to diversify the holdings amongst the various issuers, so the city didn't have any specific concentration or exposure to any one entity in the portfolio outside of the government sector. Before I show specific portfolio snapshots, I do want to mention a couple of things for going forward. The U.S. recoveries have been stronger than anticipated. However, given the current surge in the coronavirus cases and the current state of the pandemic, there is some caution about us going back to a slowing economy. So we're watching that very closely. The Fed did intervene, which has been great, but they, along with many economists, have commented that in order for us to really get back to where we're going to need some federal support. So there's a lot of focus right now on the federal government post-election and post-inauguration, whether we're going to be able to see some fiscal support. For us, in terms of the strategy, we're going to continue the surveillance on all the corporate and credit instruments in the portfolio. It's very important for us to continue that COVID-related overlay. Although there's been a vaccine, there's uncertainty about how fast that can be deployed and whether or not we'll see a return of consumer behavior to what it was pre-pandemic. We're also going to continue our high allocation to the government sector, likely continuing to use federal agencies and other government entities to keep that emphasis on safety and liquidity. Now, just a few slides, a snapshot on the portfolio. This is a snapshot of the total portfolio assets as of September 30th. So you can see a high allocation to overnight investments. That includes the city's investments in LAIF, which is the state pool, which is quite frankly paying a very attractive yield compared to other options in the market. So the city staff and PFM has encouraged the city to take advantage of that higher LAIF rate versus other options in the market until we're ready to deploy some of those overnight assets in the portfolio. This current slide strips out those LAIF assets so you can get a better sense of the portfolio itself. One of the things I do want to emphasize is that we've been managing the city's portfolio to a 1-to-3 strategy. So you can see here that the majority of the assets in the portfolio are concentrated in the 1 to 3 year area. We have diversified the portfolio amongst the different sectors allowed, U.S. Treasuries, federal agencies. We continue to work with the city to, try to find the maximum allocation of credit instruments. And you can see that strategy has resulted in a yield at cost, which is your carrying income on the portfolio, of 1.52%. That's a very attractive yield, given where the yield at market, this 42 basis points is. So 42 basis points represents what you could go out and get today as of September 30th. So having a carrying yield that high is really very attractive, and we want to continue to maintain that. The portfolio also has a very high credit quality. In terms of a return, this is what I really want to highlight just for a moment, because again, I think it's unique for the city that you've been really in an environment where you started your portfolio in the zero interest rate environment back at that inception date, and we've moved along to where we now are today, and you can see you've returned to 1.50%. And that's really very good on a since inception basis. We're also proud with sort of the past 12 months ending 9/30, where we were able to outperform the benchmark by 18 basis points. And of course, having strong performance on a trailing basis. So our goal here is to continue to capture the income in the portfolio, to drive returns by the sector allocation, but also to prepare for what's coming. And what's coming is that we're going to see declining earnings. So right now, fiscal year 19-20, the portfolio earned on an accrual basis about $3.5 million. Because interest rates are declining, this shows sort of the portfolio yield at cost. We thought it'd be useful just to show the type of analysis we do to really get a hedge or a sense of where interest earnings are going to go. So fairly simple analysis where we are so far in the year. We're expecting that portfolio yield to decline slowly over the next fiscal year, or the current fiscal year, because we're reinvesting at lower and lower rates. So our assumed reinvestment rates assume treasury yields, which again float between 0 and 25 basis points. And as we reinvest in those lower yielding assets, the portfolio yield is going to decline. What the Fed has communicated to us is that they expect interest rates to remain low at least through 2023. So our goal is to try to bridge the gap between now and then with active management strategies. So not only investing in treasuries, but also trying to take advantage of other sectors allowed by the city's policy and do some active management of the portfolio, trying to uncover best value between treasuries, agencies, and the other sectors allowed. That is my last formal slide. Are there any questions?
You're muted now.
Yes. I'm not seeing any hands raised, so, but any questions?
So I do, but I think they're more on the policy side as opposed to the investment return side.
Aisha?
Nope. I actually don't have questions.
You actually what? I'm sorry.
I actually this time don't have questions.
Okay. Well, thank you. That was enlightening to the extent that I understood all that you said, but no, I don't know what to say. I mean, I remember a time though when LAIF was just so really low, and now all of a sudden LAIF is our best, is our best investment. That seems a little bit weird.
Well, what's interesting about LAIF is, LAIF is a short-term overnight, is meant to be an overnight liquidity vehicle, and they have a yield of, approximately like 6-month average weighted life. So their yield is able to react more quickly to changes in the interest rate environment. Rates declined so fast this time around that the LAIF pool is holding on to some of those higher yielding securities, but we expect the LAIF yield to decline fairly quickly by the time we get into the first quarter of next year. When you compare the long-term portfolio to LAIF, you have an attractive carrying yield for the long-term portfolio versus LAIF, with the exception of new money right now. So if we're sort of comparing moving funds from LAIF to the portfolio, at this moment in time, LAIF has the advantage, but we expect that advantage to disappear starting in 2021.
Okay. All right. So if there are no other questions about that report, then I guess we're going to go into the other part of this, which is the investment policy. Are you going to talk to us about that too? Or?
Yes, I can. Dustin, do you want me to just go into it, or do you want to?
Sure, go ahead and go into it. I mean, like I mentioned a few minutes ago, we are simply updating the policy to statutory requirements that the state has put out to make sure that we are, obviously our policy has to be in line with the policies that govern the state and local agencies, as well as, we have had some more restrictive limits on the types of investments that on certain types of investments, and we are going to basically allow for an increase to some types of investments within the state's mandated policy, but in the hopes of getting a bit more return on investment than some of the other areas that we've been able to get some decent yields on, and allow Monique some flexibility while obviously still trying to maintain principal and liquidity. So, with that being said, I'll turn it over to you, Monique.
Thank you, Dustin. I'll start with the changes that were made to California Government Code Section 53601, and that's the section of the code that governs local agencies' ability to invest in various investment instruments. So on September 28th of this year, Governor Newsom signed into law Senate Bill 998, which allows from a period between January 1st, 2021 and January 1st, 2026, for local agencies to amend their policies in the following ways. One, local agencies like the city that have more than $100 million in assets can now invest up to 40% of their portfolios in commercial paper. And commercial paper is a short-term financial instrument that is typically issued by a bank. And it typically has a maturity of about 9 months or 270 days. So it is a short-term financial instrument. I always liken it to just a short-term corporate bond that's issued by a bank. Previous allocation for this sector in the government code was 25%, just so you have a sort of basis. So the law allows it to increase up to 40%. And that is a recommendation we're recommending the city make to its investment policy. The second thing that was allowed was that the government code was changed to allow for local agencies to invest in securities backed by the US government, so government-backed bonds, that could result in a zero or negative interest accrual if held to maturity. So what that means is it allows you to buy a negative interest rate treasury bond. So essentially think about a 10-month treasury or a 1-year treasury note, for example. If a 1-year treasury note has a negative interest rate, let's say it's negative 0.05%, it would allow you to buy that bond. And this is in preparation for perhaps interest rates going negative. Now, we don't believe that we would purchase or don't have any intention of purchasing negative interest rate obligations for the city, but this change was made in the law because there has been some talk about maybe the short-term part of the yield curve going negative, and a question if you want to invest $1,000 in a treasury bond and maybe get, $999 back. So that's an example of a negative accrual. We did recommend that change. Again, we don't anticipate doing anything with that, but in these times, it's best to be prepared for any eventuality. Other changes for that law was establishing a 10% issuer limit on commercial paper and corporate notes for all local agencies. The city's policy already has a 5% issuer limit, so we did not recommend that you make that change. Your policy is more stringent. The last change for Senate Bill 998 was that it allowed federally recognized Indian tribes to invest and participate in investment JPAs. What that means is there are certain investment pools in the state of California, CAMP, California Asset Management Program, CalTrust is another one, that pool investments of local agencies like the city, and those are joint powers authorities. So it expands the amount of eligible investors for joint powers authorities. We did not recommend any changes to the city's policy in regard to that. The other changes that we recommended for the policy were cleanup items. Just aligning some of the tables in the policy with some of the descriptor items to make sure that there was consistency between the two.
All right. Why would you put money in a negative interest rate? I mean, is that a reflection of if you didn't do anything with it, it would lose more value than if you put it in this, slightly negative interest? Is that?
Yeah, I think it's really a matter of where to park the funds. So the concern is that we may see some money market funds, some other pooled investment vehicles where you traditionally park cash, bank accounts where the banks may start charging you to invest cash or may start charging an account service fee. And rather than leaving the funds there, you may prefer to purchase a treasury obligation, which has the same impact, whereas you invest some, but you're maybe paying for the privilege of putting your money in the treasury obligation. But that's what that negative interest accrual essentially amounts to. It's if you had no options or no good options, would you prefer to pay for the privilege of a treasury bond or pay to have the money sit in banks or other short-term investment pools?
Anyone else have any questions? Sarah, Aisha?
So thank you for all of the good information.
We will not be investing in any of those, FYI.
Oh, okay.
So a couple things. One, kind of in that same vein of having language that allows us to do something that we may not do, but having some flexibility. I wanted to go to the item on public banks. And I absolutely get that there's nothing viable to do at this point. But wondering if it makes sense to have language that reflects the ability to do it so that we could make that decision, should something become available. I wondered about folks' thoughts on that.
Just information and clarification. The notice that was in the government code change for public banks essentially allowed you to purchase debt instruments issued by a public bank. So this would essentially be the city being allowed to, let's use San Francisco as an example. If San Francisco put up a public bank and issued debt instruments via that public bank, and there was an obligation of the City and County of San Francisco public bank, this language would allow you to invest in their debt or buy their debt. So we did not make the recommendation to add this to the policy, as currently we're not aware of any such banks. And before recommending it as something we would recommend you put in your policy, we would just want to do the due diligence on the structure to make sure that was something we would be comfortable recommending you buy. Whereas in the negative interest accrual example, that is a U.S. government instrument, which we know we're comfortable with the credit on.
A little bit chicken and egg. Don't have it yet, so we're not sure if it's sound investment. Okay. Well, I'll just ask that we sort of keep it on the radar. We look at these policies periodically, and we have expressed some interest in that. But obviously, it still has to be a safe investment, so on. So appreciate the caution there.
And we look at this at least at a minimum annually, but we can bring it back. Should something become viable immediately, there's nothing that says we have to wait a full year before changing the investment policy by any means. We can bring it back to the Investment Advisory Committee, which already gave feedback on this particular version of this, and then to the committee, and then to council. So it's not something that we would be precluded from doing just because we're not taking a whack at it this time. So I want to make sure that's clear.
I appreciate that. And then is there any logic, given the low interest rates, to moving some amount of our investments into a lump sum payment over in CalPERS?
I think that's something that we could certainly look at. I think it would take quite a bit of analysis, only because we can. The majority of the CalPERS liability lives with the general fund. And so it will be the general fund's assets that we could, potentially put over there. The majority of the assets in the investment portfolio do not belong to the general fund. It's spread amongst different funds, really among the entire bouquet of funds that the city has. So, is it possible? Yes. At this point, I would not advise it, only because we don't know what the pandemic will bring us and the economy will bring us right now. But certainly, as things improve, if the investment market doesn't change significantly, but the economy has improved, that would certainly be something that we would take a look at and do some analysis and come up with a recommendation one way or another for you guys to consider.
Yeah, and I know it's something that's on your radar anyway, but just I was especially thinking perhaps the enterprise funds, if one of the benefit packages would benefit by having that. I mean, even, their return rate, I think at the moment is something like 4.7 or whatever it is, which is still more than our 0 point whatever. Sure. So, okay. I appreciate keeping an eye on that. And the last one, if I may, Mayor, I'm going to do my very best not to send us down a rabbit hole. But it's a follow-up question on kind of the home ownership conversation you and I had, Dustin, and I've talked with other people in other meetings. And I just want to sort of put it out there as a very short thought experiment of, is there any logic to having a regional pool? And I wouldn't think that this would just be the city, but having a regional pool that could be used as hopefully a small number of properties tax default, or perhaps a complex needs a rehab loan and in exchange becomes an affordable property or a co-op property. Things that would have a return to the city, again, not super high return investment, but a safe return to the city's investment and others that would be part of it. Is this idea have any merit?
I think that what you're talking about is investing in socially meritorious endeavors that are consistent with other goals we have as a city.
That was so eloquently stated. I love that. Yes, that. Well done.
Yeah, and
I had a similar idea about, we're all needing to recover. Our whole society is needing to recover. And are there ways we can help that with our investment money and without risking losing? So.
I mean, that's certainly something we can take a look at and consider. As far as I am aware at this time, there's no, great model out there for specifically for that piece. I certainly have looked into some of the home ownership possibilities for the discussion that you and I had, Councilmember Lamnon, and just in general, looking at it from a specifically as an investment piece, or from that perspective, it's a tough one because we're essentially would be doing a credit analysis loan by loan. And we're not quite set up for that, but certainly if we were to get into something like a pool, it would be, something that we could consider, and likely it would be an analysis similar to what we would be doing if we were buying a Freddie Mac or a Fannie Mae. The difference there is those are guaranteed by the federal government should someone default, and we wouldn't necessarily have that protection, although there could be insurances put in place and those sorts of things. So, it's certainly something that we can continue to look at and look at ways that we can use funds on hand to help to try to bring the local community back to health, both figuratively and literally, as we sort of come out of this, hopefully in a very soon.
Okay. Thank you. Thank you, Mayor.
Okay. Thank you, Aisha.
This is just a question. The capital gains tax, does that apply to cities?
No, not at all. We don't, because we're considered, we are a tax exempt agency when it comes to revenues and those, that doesn't mean we don't have to pay sales tax when we buy something.
Yeah.
But on revenues that we get, we are exempt from capital gains tax.
Okay. Thank you.
Okay. And then I think the policy changes they don't sound like they're real significant things, and they're not changing anything that we're actually doing. They're just bringing us consistent with current law in case we want to do some things. Is that kind of what you said about that? The recommendations that you're making about, changes in the investment policy, it sounds like really that's to be consistent with what is now allowed under state law, but not that we're necessarily actually going to take it,
That's correct.
there, right? Yeah. Okay.
And the city's policy, has some strategy constraints, that are inside of the investment policy as well. So in some instances, we're not using the full authority of the investment policy because it's not consistent with the strategy that's being implemented.
Yeah. Okay. So we're okay with that, and that will come to council to make those changes. Yeah. Okay.
Correct. Yeah.
And so, do you want a vote from us that we recommend the council do this?
Essentially, yeah, that would be great. A formal vote isn't necessary. I think it's just if there are changes that you guys would want prior to us taking it to council, and simply recommending that we do so would be fantastic.
Well, I can't think of anybody else.
No, it's fine as written.
And if we come up with something, we could just email you, right?
Of course.
Okay.
But for now, when are you planning to bring this to council?
We'll probably bring it next month.
So,
December 1st next month, or
December 8th. Those are the two choices.
The 8th is more likely. Yeah.
So anyway, you can say the Budget and Finance Committee approved or recommends that the council.
Great. Thank you.
I assume that you can say that way. I'm not seeing any. Yeah.
As written, yeah.
All right. Well, anything else on this item? No? Well, thank you. And thank you, Monique, for being here with us. Probably easier than when you were, I think, you used to come physically in the room. I still think I was, but anyway, thank you for your firms, I think, has done a very good job of, improving our investment returns, even in this very difficult time. And having been around long enough, like through the last recession, and I can say this looks good.
Thank you, everyone. I hope you all enjoy your evenings.
Okay, thank you.
Thank you. Actually, I'm sorry, Mayor, not a question for you, Moni.
Okay.
Again, thank you. But a question for our city staff, if I may. There was an acronym NRSO, which is explained in the policy, but I'm wondering if it should also be added to the list of definitions.
Oh, and the appendices for, yeah, we can, absolutely.
Thank you. Since it's used frequently, that would be great. Thank you.
Okay, that brings us to item number 4, review and comment on the proposed 2021 agenda or agenda planning for this committee.
I've got that on the slide if you'd like me to put it up so people can have it in front of them. Sure. Give me 1 second. Maybe I can. Can you guys see my screen?
Yeah.
Yes.
Let me try again here. It wasn't working.
We were able to see it.
Okay, sorry. So let me try again here. There we go.
That's a pretty hefty December agenda.
So, Mayor, I would actually, given the conversations that the council has had over the October 27th meeting and then again last night, I know the committee wanted to review the police department's budget, but I'm just wondering if it makes sense to maybe push that into the spring before recommendations are made on the 2022 budget. And if we're going to do a different sort of community-based conversation about the police department budget, that maybe that makes more sense to take that off of the committee's agenda in December while we have a different process that looks at that. And that would be my only recommendation and proposal given the conversations that the council has been having.
So why is that on our agenda? Police, I know, police budget review, just because of what's going on right now?
I think that was a specific ask from, I can't remember which committee member, was it at last meeting? Yeah, I think it was Councilmember Lamnin who said, it might be good for us to do a deeper dive into the police department budget, but we hadn't actually, we hadn't finished the survey yet. And I think following the results of the survey and the interest that the community had in a more participatory budget process of some sort. So we sort of put this as a placeholder.
And as we are starting to talk about what does a differentiated response look like, or what do we currently spend, how, just to have that opportunity to have a conversation and say, well, how much of that budget goes into patrol? What is YFSB's total budget? To really have those numbers, not just for council to be able to make some sort of a deeper level of informed decision, but also for the community to answer any questions that may be out there and have some transparency about it.
Mayor, I would have to agree with Councilmember Lamnin. I think that I understand why we would push it back to the spring, but I think that's too late given some of the other things we want to talk about. And since the budget is the primary focus and we also have COVID and so many other things to deal with, I think December is fine. I think that we can understand a little bit more, and at least, some of us have a more deeper dive. This meeting has historically always been available to the public as well. So it could sit there and then we can talk about some of the detailed work or decisions in spring.
Yeah, I would agree that that we should do it relatively earlier rather than waiting till later in the spring. So I guess I would look at December and January and ask our staff which one would afford, the other items on each of those agendas, which one takes up more time. It looks like January might be better in that, we're going to review revenue. We're going to get an update on COVID-19 funding. Either we're getting it or we aren't. Or,
I would just caution that, I think if that is a topic on the agenda, there will likely be public comment. So I think the committee should plan to not have other items on the agenda that evening, just a recommendation based on how these agenda items have gone previously. So I think we schedule a separate special committee meeting in January to talk about the other items. And we could do the police budget review on January 20th on the regular meeting.
That's Inauguration Day. But I want to watch it, but that'll be in the morning. Our meetings are in the afternoon, so that'll probably be okay.
To our city manager, do you think that maybe if we also extend this meeting by just 1 hour, because I know we roughly only meet 1 hour, that's enough and limit public comments to,
The other option is you don't have to have public comments at the committee. I mean, you could say that we're going to, for that meeting, accept public comments in writing, or limit it to 30 minutes of the meeting. I mean, I think there's a couple different ways that the committee could do that. So we're flexible. We can do what the committee would like to do.
All right. So what would the committee like to do? First, December or January?
I prefer December personally. Just the sooner the better. I think that's my motto on it. And then as far as the comments, I'm open to emails and then a very limited public comments, just so we can get through this. And I think people understand that these are usually like work committees, and we, have to get to the nitty gritty a little bit more detailed. As long as that's stated well ahead of time.
And we can publish. Yeah, it'll be published on the agenda if that's what we choose to do.
Yeah.
Could we move any of those other items into January? Just
the Measure C annual report can go to January.
okay.
We could also simply take the Measure C annual report to the full council and bypass the committee. Should that be? I'm not suggesting or recommending that you guys don't get it here. I'm just simply saying if we're looking at ways to sort of fit things in shorten meetings and certainly get to the police budget review as soon as the sooner the better. It sounds like we can do that. That's an option too. The other items on December's agenda shouldn't take very long at all. So
Audit and the budget process.
Yeah, that's essentially looking at here are the dates. Let us know if you have changes. So we can do that incredibly rapidly.
All right, and the audit is a presentation of the audit.
Essentially, it's a 5 to 10 minute presentation saying, here's the preliminary audited financials. I can relatively safely say that we don't have any findings or recommendations because I've seen a draft of it. So it shouldn't take very long.
Okay, so I'll ask you, Sarah and Aisha, do you have a preference about, seeing the Measure C annual report at our committee or seeing it just with the council at a council meeting?
So, I don't think there's a lot of flexibility in that in terms of the annual report, whether or not there's conversation in the budget discussion is different. But in an annual report, I think I'm okay. I would actually have the same question about the annual audit. Assuming if there were findings, I can see the need to come to committee, but I don't know statutorily if it has to come to us first.
It doesn't at all. No.
So those usually, if there's not jinxing it, I'm knocking on wood here. But if it was fine, does that make sense to just go to council?
And then we could probably, Dustin, I think, could we get it to council before the end of the year for the audit and put it on? Oh no, that would be December 8th. That might be too tight.
Yeah, I don't think we can take it. I'll certainly transmit it to council prior to the December 31st statutorily required date. Under a memo, but we'll take it probably in January to the full council for the more formal presentation that's required.
Okay.
A quick question. Do you have to do the formal presentation or could it be an informational item?
I think actually technically what we've done the last 2 years is just a consent item.
Okay.
So it's just the council has to formally accept the audit. That's in case there were significant issues that you guys would have to, at least be made aware at a public meeting. So
understood.
Did you say you had seen a draft of it, Dustin, or you haven't?
I have seen it. I have.
So you're telling us now that you don't expect that there will be any issues.
That's correct.
Okay.
Don't tell the auditors I told you that if they ask. I kid. That's yeah.
All right. I don't usually get calls from them, so but all right. So we will take both of those things and just take them right to council, the audit and the Measure C annual report, and we will focus on the police budget review. And we can take a quick, look at the budget process. I know you probably want to bring that to us, and we probably do want to look at it because you'll be starting the work in, January. So, but we could probably do that too. So that's
sure. We'll get a brief report and also the actual the calendar so that you guys can look at it ahead of the time on the meeting. I wouldn't expect that there'd be any or much public comment on it. If we do have attendees at the meeting, so it should be a relatively swift item.
Okay. All right. Any other comments on the planning agenda?
Just a clarification question, if I may. In February, I know we're going to have the referral back, and I think we were also talking about just looking at our financial policies in that meeting. Not just having the one conversation, but kind of looking at our policies broadly. Is that making sense?
Correct. Yeah.
Thank you.
And, I'm sorry, which?
February 17th.
She's talking about the cannabis revenue unfunded liability control item. Yep.
Yeah, we're going to look at it in context with the other.
So I just want to make sure we're going to add another line. So right now it's like 2 items. Director Clausen, you're comfortable with adding the full policy review, right?
Correct. Yeah, looking at the the referral and then also the fund balance policy that we've got in the budget. Right. That's the policy you were referring to, Councilmember Landon.
Certainly, and we do every couple of years look at the financial policy, and I know we're not necessarily due to do that in 21, but I think given part of the question here is, do we already have policy that covers this? And so being able to look at our existing policies as we have this discussion seems helpful.
Sure.
And is where I thought we landed last month.
Yeah, that's what I recall.
Okay. Thank you.
I see that we are once again planning to have the budget, the council approve the budget by the end of May. I hope nothing calamitous happens this year to keep us from doing that.
Everyone better be hoping the same thing.
All right. Any other comments on this item? With that, are there any announcements? I'll speak at once. Okay. Well, in that case, it looks like we have come to adjournment. And I'm feeling a lot of energy here. Is everybody that?
Thank you, Mayor.
Thank you, Mayor.
Thank you. And
good night, all.
Adios, guys.
thank you. Bye-bye.
All right. Thank you, everyone.